Good afternoon, everybody. It is wild, fun times in the market. So it was supposed to be Pro Traders React, but it's Pro Trader React because Derrick and I were abandoned by JR Romero and Sami Abusaad. Yes, we are naming names. They abandoned us on one of the greatest trading days of the year. Derrick was the only one who was man enough to step up. So I am going to have to torture him for the next 20 or 30 minutes as we navigate this market, try to figure out what's going on. So Derrick, we had an interesting little exchange before we came online, but like you talked about how like generally traders like volatility, but it might actually be getting out of control. So like, tell me a little bit about like what that feels like out there.
Sure. So I love volatility, generally speaking. I know JR on the show on several occasions has talked about how this is just a heaven for day traders. And I don't disagree with him. I do really like volatility. We had periods of time over the course of the last couple of years where the market was just so slow that it was really hard to find good, consistent opportunity because nothing was happening. Now the market is like every 5 minutes moving as much as it did on full trading days last year, which is just completely insane. Personally, I like a moderate amount of volatility. I need things to move because movement pays me. But the way we're moving right now, it's like I can't even go to the bathroom. I can't get lunch. I can't go to the bathroom. I go to the bathroom. I'm gone for 2-3 minutes. I come back. I got filled on 40 limit orders. A comment came out from Scott Bessent or Donald Trump, and I'm playing catch up like, oh my God, what just happened? Where are my game plans? I got to keep up with my positions. Like the degree of movement right now, it absolutely breeds a lot of opportunity, and that's fantastic. I'm going to go back and watch a replay of this video at some point, however far down the road when the market goes back to being really slow and really anemic, and be mad at myself for even saying this at all. But this is like, it's like a little bit too much. These multiple percentage movements seemingly every 5 minutes on headlines that are constantly coming out. It's like, I like to be able to take a deep breath and be able to go down and make some lunch and feel like it's okay for me to go fill up a glass of water, and it might not cost me $100, you know?
Okay. Like, does this type of action, does this like keep you up at night?
Generally, no. On a little bit earlier in the month of April, when we were having the biggest movement in the market, really since COVID, and primarily, and I'm really honest about this. I remember saying on your show right before the reciprocal tariffs were announced on that Wednesday that I was going into it long because I thought that of all the possibilities that he was going to do, that he wasn't going to do the nuclear option, which is what he ended up doing. So I got hurt pretty bad P&L wise the 2 days after the reciprocal tariffs were announced. And it was within those few days where the P&L swings, my P&L swings in the month of April have exceeded my record P&L swings prior to 2025 by like 3-4x. It's just insane. So I generally don't lose sleep over the market. I'll be honest, April, I definitely have a little bit. But I'm an equity trader. And what I taught myself a long time ago, just to help me manage stress, because I do keep swing positions out every single night, is to not look at the futures market after the 8 p.m. after hours market closes. Because I don't trade futures. So if I'm lying in bed at 10 p.m. Eastern time, scrolling through my phone to see where the futures are, and the futures are down a lot or up a lot, all that's going to do is going to create anxiety. It's going to make it so that I can't sleep, and I don't want that. So I created a rule for myself a long time ago, which I did violate, honestly, a little bit in April, not to really ever look at the futures market. As soon as 8 p.m. comes around where the after hours closes, I am shut down. I am turning off. Ideally, even before 8 p.m., I'm shutting down and I'm turning off. And that's a way that I can manage stress, which is also why the 24-hour equity market trading that is basically, coming, and I think it's about to come to our prop traders at T3 pretty soon, is my nightmare. That's nightmare fuel for me, because I love that the market closes. It forces me to shut down. If there's an opportunity for me to make an extra, even a little bit of money, and it's the middle of the night, and it's like April has been where the market's moving huge, I might be up like never sleeping at all, and it's not healthy. It's not healthy.
Okay, all right, but how different is that from after hours trading now?
It's a good point. So a lot of the times in after hours trading now, things get so slow that they don't matter. So like I was saying to you before, I'm always shutting down by 8 p.m. at the latest, because that's when the after hours closes. But usually I'm shut down pretty decently before that, but not always. When there are big events going on and big movements that are happening, there will be periods of time. I mean, earlier in April when we were moving that crazy, and I'm on Mountain Time because I'm in Idaho right now, I was basically trading from 2 a.m. to 6 p.m. every day, because there was movement from 2 a.m. to 6 p.m. every day. And it's just, even that is just too insane. And I think I ended up getting sick. I think JR's sick right now, probably for the same reason. It's most of the time it's not going to matter, but every once in a while when things are going crazy like they've been recently, you could be up trading all night because the movement's there. Okay,
now would you rather have this like where we get like a month of this a year? It'd be cool if there could sort of be, this would be impossible for the markets, but if there was like sort of a playoffs for the stock, I mean, earnings season is a little bit, but like if there was like a playoff season where things are guaranteed to get crazy for like a month.
That would actually be really cool. But if we're just doing wishful thinking on how we would love the market to trade, I wish the market always traded with like a medium degree of volatility. Not where it's just flatlined all day and there's nothing going on, but not where I can't get up and go fill up a glass of water because it might cost me $1,000 or whatever. I just want consistent, like medium amounts of volatility, and I'd be very happy.
Okay, guys, let us know out in the chat, where are you watching from? Let us know where in the world you are from. We usually get a good international crowd, so let us know where you're watching from. Okay, all right. Now, we also have earnings season going on. Obviously, big story is Tesla, Derrick's favorite topic. Okay, so Derrick, I want to ask you like a serious question. Do you think, is Elon Musk, is he a good CEO or is he a great CEO?
He has had periods of time of greatness, to be 100% honest. He has had periods of time of absolute greatness. I mean, he has been able to build a story around his companies that have created, for lack of a better term, a cult, where people will hang on to everything that he says. And a good CEO is a good storyteller. And in that regard, he has been one of the best out there, because how else would you be able to keep a company trading at the multiple that it's traded at for years and years and years, trading at this expensive multiple? Even now, when the company has no growth anymore, it still manages to trade at a really high multiple and a really elevated price, and has the capacity to squeeze higher. And in that regard, I got to give him a lot of credit. I think overall he's been a fantastic CEO. I think he made some really big mistakes, though, by getting involved with politics. Look, politics is bad business. It's really as simple as that. And especially with the business that he is in, where his customers were so catered towards people who are on the left, to then go so far onto the right, that's just really bad business. So I think overall, honestly, he's been a great CEO. I've disagreed with a lot of the things that he's done over the years. He's had some things that I felt were very borderline, where the SEC should be investigating, like the 420 funding secured, going all the way back to that. But he's always managed to kind of skate by when it comes to the regulators, and he's never gotten in too much trouble. But recently, his actions by getting involved in politics have, in my opinion, ruined his brand. So, it's just a problem. I've been saying it every week on your show, and all the statistics, all the studies show it, is the people who are most excited about EVs tend to be people who are on the left, and they tend to be people who are younger. And that same cohort of people will also tell you, very, very generally speaking, they have no interest in Tesla or the Tesla brand because of what Elon has done. And that, I think, is damage that will take many, many, many years to fix. And that's assuming he even attempts to fix it, which is a pretty big assumption.
Yeah, I do think that the storytelling aspect is big, because it's so interesting, because like you could make the comparison to Steve Jobs, but Elon Musk is doing it for products that don't even like exist yet, like the robots and stuff and all the other things that are allegedly going to come online in the next year. But I think, like, I'm pretty sure every single, and I'm a huge fan of Tesla, the company, and it does seem like every single new big Tesla thing is later than expected, and it's worse than expected. Though I guess that's like, it's classic, like, hyperbolic salesmanship.
Yeah, 100%. And that's exactly what's going on right now. You know, I mean, that earnings report last night was atrocious. It was absolutely atrocious. The stock is trading well on it, and I would note that for a few reasons. So one, when a stock trades well on bad news, sometimes that really is a major signal to go the other way on a stock. Two is, there were huge misses compared to the average analyst estimate, but the average analyst estimate I don't think really mattered anymore. They were stale, and they didn't really include the whisper numbers were significantly less than what the average analyst estimate was. So those numbers were atrocious, but compared to what was priced into the market, they might not have been so awful. And then the final thing that I think is giving the stock a pump more than anything else is him kind of announcing that he's going to be at least taking a step back from Doge and focus more on Tesla. That, I think, is the number one short-term upside risk to Tesla, is that he actually begins to refocus on the company a little bit, because there's no way he's been able to do that properly.
Okay, folks, let us know in the chat. Do you like Tesla stock here? Type 11 for yes, 22 for no. Again, 11 for yes, 22 for no. Okay, all right. I'm just seeing what people are saying in the chat. Yep, we got a good crowd from Arizona, Florida, Oregon, Phoenix, Florida, Netherlands, New York, North Carolina. And so, Derrick, is that an Avenged Sevenfold t-shirt?
Yes, it is an Avenged Sevenfold t-shirt. I regularly rock concert t-shirts on your show, but the only one that ever got called out before was that Led Zeppelin t-shirt
Yeah,
that
okay.
time.
What's the best concert you've ever been to?
I've been to a lot of shows. It's a hard one when you're putting me on the spot like that. Probably one of the Metallica shows I've been to at Giant Stadium, whatever they call it these days.
Yeah, I hear that from a lot of people. So
they put on a phenomenal show.
What do you think is the best Metallica album?
Oh, without a doubt, Ride the Lightning. I think that Ride the Lightning is maybe the best metal album of all time.
Interesting. I used to play when I was younger, when I played video games, I always used to play Doom with Ride the Lightning, like blasting in my. I remember I having like the because like my computer in the 90s had like a CD drive in it, and I used to have my Ride the Lightning disc in there all the time.
I did the exact same thing, but it was Jet Moto on the original PlayStation.
Yeah. The song Escape, I love so much. It's such a good song.
Yeah, for sure. That entire, I mean, all that classic Metallica is phenomenal.
Okay, all right. Back to this fun market stuff. Do you like? How long do you think this could go on? Because we know the Orange Man loves to stir up shit, and yeah, he has. I mean, the oddest thing about Trump is that I feel like being in power makes him younger. Every other president, like, looks demolished at the end of the term, but he seems like he loves it too much. Like, how long do you think the craziness can go on?
What do we have? 3 years and 8 months left of his term?
Well, if he gets his way, it might be 7 years.
I was about to say that's assuming he doesn't make himself dictator for life and then figure out a way not to die. So
our friend Penny in the audience says Talking Heads, Prince, and The Who were the best. I agree. I went to see Prince twice, by far the best concerts I've ever been to. Yeah, but I mean, like, it does seem like, just from a pure comparison standpoint, if we go back to like medium volatility, that's going to feel like mega low volatility. It's going to be, there's
It
going to be,
does.
I feel like the floor has been elevated so much.
We've had a couple trading sessions where we've moved enough where if it was 2024, I'd be like, oh, this is great. We got some great movement going on. And it's just felt like nothing at all is happening. But I'm okay with that normal. I'm okay, like I said, with being able to take 15 minutes to go downstairs and make myself some lunch, even if I'm still eating it in front of the computer, which I always am. I like being able to have those couple minutes there.
Okay, so since you work with a lot of traders that are coming into the business, and you work with a lot of the most experienced traders at Trading Group, and you supervise this huge group of people, like, what do you tell people that are coming into the business now?
This is really hard for people that are brand new. Because the risk reward ratios, so the way that I think about risk in an individual trade is basically like almost the following formula. First, you need to figure out how many dollars do you want to risk in your trade. For simplicity's sake, let's just say I want to risk $100 in this trade. Then you need to figure out, well, where is my entry price versus where my stop loss needs to be? And then you back into your sizing, right? So for example, if you want to risk $100 on a trade and the trade calls for 10 cents worth of risk, you take 1,000 shares. Calls for 25 cents worth of risk, you take 400 shares. 50 cents worth of risk, you take 200 shares, etc. The problem with this environment for traders that are newer or smaller is that the space risk, when volatility becomes this big, really increases. So this is a type of environment where in order to risk the same amount of dollars, you end up taking less size, but you have to give it a lot more room. The problem is that you're so small that you can only risk $100 in a trade with that example. You can't really take enough size to be able to trade properly in a lot of situations. You can't really game plan properly. And I think that everything else held equal, having more size in a trade is always better because more size gives you more game planning flexibility. More game planning flexibility means that you can be profitable in situations where maybe you otherwise wouldn't if you only were able to take like 100 or 200 shares. So if you were to take me and you were to take and I trade with a lot of risk with a decent sized account. And if you were to take me and you were to sit me next to like a smaller entry level trader, and we take the exact same trade with the exact same entry price and the exact same stop loss, and it works a little bit and fails, or it works just perfectly, in almost every single situation, I'm going to end up making more money than that smaller trader on a percentage basis of the amount that we risked, because I was able to take more size and have more game planning flexibility. So that makes this type of environment just really, really tricky for anybody that's new and trying to learn. Because and it's also not forgiving on mistakes. Because if you make a mistake, you make a psychology error where you pull a stop loss, or you make a keystroke error where you press the wrong button, you can lose so much money so fast if you're not disciplined with this market on your risk rules and on your execution, that it just makes it really tough for those newer traders. For people, I think, who have at least like a year or two of experience in the business, you need to learn to be able to shine in this environment. And it's not going to be that you make money on every single day or every single trade. I'm certainly not. I'm not making money in every trade. I'm not making money every day for that matter. But net, I lost money on Monday. Monday, I was flat out wrong on the market. We gapped down on the Jerome Powell Trump headlines to SPY 520. I thought we were going to hold 520 and be able to bounce off of it. I was dead wrong, and I lost a good bit of money on Monday as a result. But guess what? Yesterday, I made like 3 or 4x what I lost on Monday. So it's not that I'm not having red days. It's not that I'm not having red trades. It's just that with this movement, if you've got some degree of experience and a decent capital base behind you, you should be able to make so much more when you're right than when you're wrong, because the movements are there.
Yeah. Okay. So I want to kind of explore the connection between sports in trading, because I was talking to Adam Mesh before about this, because it seemed, it's like, because for those that don't know out there, Derrick was a champion kickboxer, which is why I can't tease him that much, at least when he's in New York. For now, he's away, so he can't kick my ass. But like, it seems like athletes, when things are going well for them, they need to like put the pedal to the metal and ride the momentum as much as possible. Like, we see people in basketball like get on hot streaks. Like, I'm going to ask like a kind of a stupid question. Could it actually make sense to take bigger risks in an environment like this, just because the rewards are also so much bigger?
Yeah, for people who have that skill level, who are already doing well, then you want to be able to size up in this environment to be able to make more. Like, I mentioned, even for myself, I'm having the biggest P&L swings I've ever had in my entire life by a multiple. And to some degree, I think I should probably pull back a little bit on the amount that I've been swinging, just because it's been a little bit too much. It's been a little bit too stressful, but I should be swinging significantly more in this environment, generally speaking, than I was in a 2024. I should be risking more, because there is more money to be made. So I 100% agree with you. But I actually had a conversation with a trader about this last night, who has been doing very, very well. One of the traders in the team who's been doing extremely well. And he reached out to me and he was like, man, like, I'm doing so well. I've had such a great read on this market, but I feel like I could have and I should have been making so much more money. Like, what do you think I should do? And my advice to the trader was to work on sizing up. But when you size up, you got to size up in a small but incremental way. I've seen this happen to a lot of people where, sure, this is a better environment. You want to size up for this environment because you can make more money. But if you size up by so much that your P&L swings start to get in your head, then it's going to cause damage on what you're doing. Like sizing up too big, too fast creates psychological issues with your trading. So the key to sizing up, in my opinion, is to size up slowly and incrementally based on success. And then, sure, I'm also a big believer in what I call risk skew. Risk skew basically means if you see a better opportunity in the market, you should risk more on it. And that could be like because today as a day is providing more opportunity for whatever reason, or because this trade that you found is this A+ home run trade where you should really be sizing up and risking what you might risk in an entire day on just this one trade because that opportunity is so great. So absolutely. Size up when you're doing well, size up when you have an environment that's good for your trading style, but do it in a way where you don't hurt yourself psychologically, where you're no longer following game plans and you're not managing risk properly. And then also, do these, like, I'm a big believer in doing like, and this also comes from sports, by the way, like mental visualization exercises. Visualize that A+ trade, so that when that A+ trade is in front of you, you've seen this 1,000 times before in your head, and you are ready to go. You know what this looks like. You know you need to execute. You know what the game plan is supposed to look like, and you put yourself in the position to make big bucks.
Okay, yeah, I do think, yeah, I mean, it is interesting, like, because most, like, professional athletes do like tons of visualization work. Like they imagine them, because I think it's like, I think there's even like, I'm pretty sure there's been studies shown that like like basketball players imagining themselves hitting free throws, stuff like that, tend to do better.
Yeah, there's been studies done by neuroscientists that show that, I don't remember the exact statistics, so I might not quote this perfectly, but something like, using your basketball example, visualizing yourself shooting that three-pointer helps you build something like 40% of the neural pathways that you would build by actually taking the shot. So it's not as good as actually being on the court and practicing, but it certainly, helps to make you better. And back when I was fighting professionally, that was a really big part of my process. I would visualize every aspect of the fight. I would visualize my song coming on as I'm doing the walkout, being in that right like mental trance that I needed to be in to get into a fight, getting into the ring, getting the crowd going, touching gloves with my opponent. I would visualize every aspect of it, and that made me better at the sport.
Yeah, it makes sense because like you sort of have to hypnotize yourself to the idea that you can, in anything, that you can win.
100%.
So it seems like, yeah, visualization. Does anybody out there in the audience, do any of you do any kind of visualization in your trading?
Yeah.
Okay, so back to this big happy sloppy mess of a market. Like, do you think it's even worth trying to pick a direction, because by 12:45, God knows what could happen? Like, do you think it's even how far can you look out these days?
So you can look out pretty far, but you have to be open to constantly adjusting your thought process and changing your mind. You have to be able to be mentally flexible in this market. Like I have been of the thought process really for this week and part of last week, that the short-term risk to this market is more to the upside than the downside. I think that the positioning risk is to the upside, and I think that the headline risk is to the upside. I've been saying this for over a week now, where yes, we move down on bad headlines, but we move up more on good headlines than we move down on bad headlines. So that makes the news risk, the headline risk, and we're getting headline risk constantly, more to the upside than the downside. But the bigger picture, like so small picture on like a daily level, I'm a bull. Maybe even intermediate level, I'm a bull to neutral. Big picture, I'm a bear. But right now, I would rather be long this market than short it, because we're in the midst of this 90-day pause window. At some point, if there's no deals getting done and this 90-day window is about to expire, we could begin to see a real temper tantrum from the market again. But we're still relatively early within this 90-day window, and all of the headlines at this point, the headlines are almost as bad as they can get. We've got like 250% tariffs on China. Trade with China is over. We've got 0 deals done so far, even with our allies. You had Trump come out and try to undermine the integrity of the Fed. Like what else is bad can possibly even come out at this point, outside of maybe some bad earnings reports as we get more into the micro of earnings season. So the short-term risk, I really do think is to the upside, but then on the longer term, we need to see if our event-driven bear market becomes a cyclical bear market. In other words, the bear market that we're in right now was caused by an event. That event was tariffs. A cyclical bear market will be, all right, the event is over, we got through it, maybe we even eventually get clarity on what these tariffs are supposed to look like. The cyclical bear market comes in the form of lower growth. And I don't see any universe where tariffs don't create lower economic growth in the United States. It's just a matter of how bad that actually is. When you combine that with the fact that we had been trading on a pretty high multiple when we came into the calendar year, what that looks like is both sides of the PE formula can potentially go lower. So it's hard to be like a real big picture bull in this market unless we start seeing some genuine deals get done. But in the small picture, I'll tell you what, we get a headline that hits, and we kind of got a little taste of it last night. You get a headline that hits that says Donald Trump's people and President Xi's people are ready to talk. We'll explode higher on that. But that's the headline that this market is begging to hear. But it's going to be like a 6-month, multiple year process potentially of then seeing the slower growth come in that are as a result of this stuff. And you'll see that in the earnings reports and in the multiples.
Okay. All right. Okay. I think that's a good note to close out on. But before we go, are there any names you really like here that like you're willing to hold on to?
You don't want to ask me like my favorite sandwich or how I like my pasta.
Well, okay.
Or...
Well, since certain people didn't show up, they don't get to participate. You know who you are, JR and Sami. Stab me in the back. I feel like Julius Caesar right now. They are catching hell. Believe me, they will pay for this. They will pay. Okay, Derek? What's your favorite dessert?
I'm an ice cream guy. I'm an ice cream guy, particularly cookies and cream. Though there is a world famous Huckleberry Shake in Victor, Idaho, or if you're ever out in the Jackson Hole area, I definitely recommend taking the drive just for that world famous Huckleberry Shake. But outside of that, I'm not a big pastry guy. I like an occasional cookie once in a while. I'm not too much of a cake person, but ice cream is a real weakness for me. I don't let it in the house.
I don't know. I don't know if I've ever had a huckleberry.
You're missing out. They're like very similar to blueberries.
Yeah. Okay. All right. Doge 45 and 47. Is a front kick or a side kick more powerful?
A sidekick,
All right,
100%. And that,
Derek,
that was my number one weapon back when I fought.
all right, Derek. Do you have any strong feelings about croissants?
I think croissants are a little bit overrated, though. Last time I was in Paris, I was starting to get a little more turned on to them because there's a lot that you can do with a fresh croissant.
Croissants can be good for egg sandwiches too.
I think so too. Yeah, they're just a little. I want them to be a little more filling, is really the bottom line, but they're good.
Yeah, it's sometimes weird because sometimes also like the best croissants are like very flaky and they kind of like create a mess.
Yeah, and so kind of like you're eating some air, but they're pretty good.
Pretzel croissants are really good.
I don't know if I've had that. I got to get it on the list.
Okay. All right. Okay. So, all right. Before we close out, so Derek, is there anything you like here?
So I like the idea of having some China exposure. It's hard because of how volatile it is, but like I was saying earlier, I think if you get a headline that hits on not even a China deal, because that might take. I think Scott Besson came out today and said it might take 2 to 3 years to get a deal done with China, which, by the way, that's an absolute and utter economic disaster. But I mean, look, the fact of the matter is foreign markets are outperforming U.S. markets. Europe is outperforming the U.S. China's outperforming the U.S. You generally want to be involved in markets that are actively stimulating their economy and not the opposite. Obviously, the entire world takes an economic hit over the tariffs that are ongoing, but the United States is combining tariffs with austerity. It's not a great formula. China is saying, all right, bring it on, and we will just stimulate the hell out of our economy in the meantime to be able to get us through this. So I like the idea of having some China exposure. Alibaba is my favorite in the space. You get a headline that hits that these guys are going to start speaking. I think that the stock is very quickly back above 130. It's trading just under 120 right now. Granted, it is like $12 off of its April lows. So it's already had a big boost, but I think that there's more room to go. And some of these growthy type names have been trading really well recently, like for lack of a better term, the ARKs of the world. I mean, ARK is up 5% today, so those stocks are going well. Palantir, I'm actually short Palantir. I have that on just because I've got so many longs on that I want to have it offsetting my shorts. But I called out a Palantir long today. Palantir looks phenomenal. Palantir looks really, really good above this like $95 to $97 area. It's trading at 102 right now. We saw some hugely bullish option flow hit in Palantir yesterday and again this morning. Some of it was a little bit dated out to September, but it was like 165 calls on size were going off. There's a potential that Palantir has another, especially if you can get any market help, which is a really big if, that Palantir is another one of those insane squeezes that we've seen it have in the past, and it might not be too late to be involved in that. But I would just still say what I've been saying, correlations are higher right now. So you got to start by studying the market before you get involved in any individual stocks. But there's a lot of opportunity out there from a day trading perspective and a short-term swing perspective.
All right, awesome. Okay, Derek, thank you for joining me. Thank you for stepping up like a real man. Unlike certain other people who I shall not name, it would be really rude if I brought out Sami and JR betraying me like this. Okay, guys, thank you for joining us. Hopefully we will be back next week with the full crew. Everybody have a wonderful day. Good luck out there. And
Thanks, Mike.
Go get some Huckleberry ice cream.